Bitcoin suffered a massive drop overnight, losing more than 12% to $19,850 amid stronger than expected US CPI figures. Before the news released technical indicators, particularly the 100-day moving average, MA, indicated the possibility of a bullish trend continuation. However, the BTC/USD has fallen below the moving average, resulting in a significant drop. In this update, I will discuss the fundamentals that drove a sharp sell-off in Bitcoin and the technical outlook that suggests Bitcoin may be about to pump if the signal is right. The Bureau of Labor Statistics released one of the most anticipated datasets, the Consumer Price Index, CPI, and Core CPI, during the U.S. session. Both figures outperformed the previous month's release, fueling a strong rise in dollar demand. Consumer prices rose 0.1% month-on-month, following a flat reading in July and falling short of a 0.1% reduction estimate. The US CPI index was 296.17 points in August, compared to 296.28 points the previous month and 295.53 points expected by the market. The annual inflation rate in the United States fell for the second month in a row to 8.3% in August 2022, the lowest in 4 months, from 8.5% in July. However, it's still above market expectations of 8.1%. To understand this, we first need to understand what inflation is. It reflects a change in the price of consumer goods and services, so, a higher inflation rate signifies solid economic growth. However, if the CPI figures cross the Fed's inflation target levels, it becomes hyperinflation, which isn't considered suitable for the economy. The U.S. government has mandated a 2% inflation target to maintain price stability. The results are beneficial for long-term preparations. However, when inflation is significant or fluctuates frequently, it becomes difficult for companies and consumers to predict costs accurately. The Federal Reserve's policymaking Federal Open Market Committee has had a 2% annual inflation target as assessed by the yearly change in the price index for personal consumption expenditures, PCE, since January 2012. The economy is expected to slow, as the Federal Reserve, the Fed, continues to tighten monetary policy and COVID economic relief programs come to an end, bringing core personal consumption expenditure, PCE, inflation down to the Fed's 2% medium-term target by late 2023. The Fed's medium-term target. To control this, the Federal Reserve may have to go for another round of rate hikes. The high CPI figures ensure that on Wednesday of next week, when the U.S. Federal Reserve announces its next policy decision, the Fed fund rate has a strong prospect of being raised by 0.75%.